Okay. So, hi everyone. I'm Nitisha Jain, tax expert associated with Clear Tax, and my area of expertise is income tax. Today we are here to discuss about the basics of income tax filing, what all the documents you have to keep it with you if you have to file your income tax return, then how you can maximize your tax savings, what all investments you can make. We'll be discussing about all those stuff. So, before we begin our session, I would like to welcome you all and appreciate that post lunch you are attending the webinar. So, this I'll make sure that this session is going to be very useful for all of you who are present and who are listening. So, meanwhile, during the session, if you have any doubts, you can just type in the chat box, and my colleague Nupur is there to answer all your questions over there. Then once I'm done with all the questions, then I'll also be taking up the question answer session live at the end. So without any further delay, let's move in today our agenda. First of all, we will be discussing about what is Form 16 and what is Form 26A. As a salaried individual, these are very important documents for every individual. So we'll give a brief about that. Then what are the documents which you have to keep in mind before your IT filing? Then from this year onwards, there is an option now to choose between old regime as well as new regime. So which regime you should choose, what will be beneficial for you, we'll be discussing about this. Then apart from income from salary head, there are two other heads of income which are income from house property and income from other sources. We'll be discussing about in brief of these two heads. Then what is the right ITR form which you should file? What are the things which are included in ITR forms? Then as per your income, what ITR will be suitable for you? We'll be discussing about that. And at the end, consequences of not filing the return on time will be followed up with the demo of how you yourself can file your income tax return in just few minutes via ClearTax portal using JSON download. So this will be ended up with the question and answer session. So let's make the session interactive one. You just ask all the queries in the chat box and we'll make the interaction. So first topic comes is about what is Form 16 and its significance in filing the ITR. First of all, what is Form 16? And very common question which comes into mind is that where can I get this Form 16? Normally everyone, not everyone, but yeah, most of the people have this doubt that from where should I download my Form 16? So there is no way to download your Form 16. Form 16 is a document which you get it from your employer and they only provide it. You don't have to download it from anywhere. And it is essentially a certificate which the employer issues to their employees. It provides a validation that TDS has been deducted and deposited with the government authorities on behalf of the employee. So it gives a detailed summary of the salary which is paid to the employee and how much amount of TDS has been deducted. Form 16 consists of two components, Part A and Part B. Sometimes some employer issues one Form 16 in which Part A and Part B are combined, but some employers issue in different parts. So this you have to make it sure that you are receiving both the parts of the Form 16. So what Part A covers? Part A will cover the details of quarterly TDS which has been deducted and deposited, then details of the TAN of the employer along with the other information. So this it will contain the name and address of the employer, also the TAN and PAN of the employer as well as employee. Then Part B will cover the detailed breakup of salary and everything. But before that, if you are having more than one Form 16 or in case if you have switched your job in one financial year, then in that case, let's say for example, you have switched in two companies in one financial year. So in that case, you have to collect your Form 16 from both the employers and at the time of return filing, you have to submit both the Form 16 in your ITR because that will also be mentioned in your Form 26A which you will download from income tax portal which we'll discuss in the next upcoming slides. There is also a common question that do I need to pay the taxes on my salary income at the time of only filing? So it is not necessary always. This is due to reason that you don't get the entire burden of taxes at the time of filing. So what the employer do, they will deduct some part of the taxes as taxes from your monthly salary income, that they will deposit to the government, and likewise you don't have to pay the entire tax at the time of income tax return filing. So it's not necessary that you are paying entire taxes. It will be deducted from your salary component every month in form of TDS. Then also there is one common question that do I need to pay income taxes on every rupee which I'm earning as salary? So again, answer is no, because obviously you will get some amount of exemptions or deductions against your income. Now we'll be discussing some exemptions which fall into section 10, and it will be deducted from your income from salary. What are those deductions? First deduction is which talks about is house rent allowance, which many people avail, is a common exemption because our hometown is in a different city and our workplace is in different city. So employer provides us HRA, and what it is, it consists of three conditions. So whatever will be the least amount will be considered as HRA exemption. Now what those three conditions are? First one is actual HRA which is received by the employee. Then second condition is 40% of the salary for non-metro city, or if in case if your this job place is situated in a metro city, then 50% of salary will be exempted. Metro city includes Mumbai, Delhi, Kolkata and Chennai. And the third condition is actual rent paid less 10% of the salary. So whatever will be the least of the amount in these three conditions, that will be allowed as your HRA exemption. Then in case if you are living in your parents' house and you are paying rent to them, so then also you can claim the HRA amount. But in that case, your parents have to show the rental income in their return. Then another question in this comes is that if I'm having a home loan and also I'm paying rent, so can I claim both? So yes, you can claim the home loan also under the head income from house property, as well as you can claim HRA, and it will be reduced from the income of salary. So this is the HRA exemption which talks about. Then another exemption which is leave travel allowance. So this union budget passed a leave travel concession, and in this what they give the conditions is that, as we all know, due to this COVID pandemic we were not able to travel last year, so many people were not able to avail their leave travel allowance. So what government came up with a scheme of leave travel concession. In this what they did was, they provide the taxpayers with some conditions, and if you are fulfilling those conditions, then you can claim LTC against your LTA income. So what those conditions were, first one was, if you have purchased any kinds of goods or services on which you have paid GST of 12% or more, and you have made the electronic mode payment, then in that case, if your expenditure also is between the period 12th October 2020 till 31st March 2021, then in that case you can claim exemption which should not exceed rupees 36,000 per person, individual employee including his family members, or one third of the specified expenditure, whichever is lower. I'll explain you this by an example. Let's suppose you have spent rupees 1 lakh on purchase of goods on which you paid GST of 12% or more, and you made the payment in electronic form. So 1 lakh ka one third will be 33,000. This will be the amount which you can claim under LTC. But in case, say for example, this 33,000 got extended to 40,000, then in this case you will get maximum exemption of rupees 36,000 only. So this is what the leave travel concession was due to this COVID. this leave travel concession got introduced in this budget, and this you can include if you are expending money starting from period 12th October 2020 till 31st March 2021. Then only you can avail this benefit. Then another thing which comes under part B of Form 16 are the deduction sections. So in deduction part, first one comes is about standard deduction. You can claim flat 50,000 as standard deduction in your from your income from salary. Then professional tax. So this will depend on your location of the company. Accordingly, to 2400 or 2500 will be reduced from your total income, yearly income of salary, and standard deduction and professional tax will be allowed against your salary income. Once this is done, then it will the total amount which is coming will be your net salary income. From your gross salary, all the section 10 exemptions will be reduced, which will be HRA, LTA. After that, all the deductions, which will be your standard deduction as well as professional tax. After reducing this, whatever amount is left over, that will be called as your net salary taxable income. This once this is calculated, then we'll be coming on to all the chapter 6A deductions. So whatever investments you have made into in all the section 80 deductions, that will be falling in chapter 6A, and this will also be forming part of your part B of Form 16. So first and foremost deduction which talks about is ATC. What falls into ATC is that all the employee provident fund, then public provident fund, whatever amount EPF has been deducted. Then in case if you are paying children's tuition fees, that will also be included in ATC. So Kanya Samriddhi Yojana, life insurance premium if you are paying, then principal on home loan repayment. These all components will form part of ATC investment. In this section, whatever amount you are investing, you can claim maximum deduction of rupees 1.5 lakh as a deduction, and apart from this, in case if you are contributing to NPS, which is National Pension Scheme, in ATCCD 1B you can avail maximum 50,000 as deduction. So if you have availed the entire ATC limit, which is 1.5 lakh, and additional limit of 50,000 you can claim from ATCCD 1B. So in total you can claim 2 lakh from these two sections. Then apart from ATC and ATCCD 1B, you can claim deduction under ATD. So what does this ATD talks about? This talks about the medical insurance premium policy. If your age is less than 60 years, then in that case you can avail maximum deduction of rupees 25,000 as your medical insurance premium for yourself, your spouse and children. But if you have taken insurance policy for your parents who are not senior citizen, then for them also you will be able to get 25,000 of exemption. But in case your parents are senior citizen, then the deduction amount will get increased to 50,000 rupees. But in case also there is one condition, that if your parents are senior citizen and you have not taken any insurance policy on them, but you are incurring medical expenditures, so in that case also you can claim 50,000 as a medical expenditure for your senior citizen parents. So this is what ATD section talks about. ATCCD 1B is about NPS, in which you can claim maximum 50,000. This limit will be over and above the limit of 1.5 lakh. This we had already discussed. Then coming on to our next topic, which is Form 26As. So what is Form 26As? Or I can say it is a tax credit statement, is one of the most important tax documents for any taxpayers. It truly reflects how much taxes you have paid to the income tax department, either by yourself or through any other taxpayers. So it is a consolidated annual tax statement which shows how much amount, how much details of the tax deducted at source is reflecting, then tax collected at source, advance tax is paid along with the self-assessment tax. This form will also show the details of sale or purchase of immovable property, then mutual funds or cash deposits or withdrawals, and likewise. So whatever amount you have to claim the tax deducted, it will be shown in your Form 26As, and you can claim it at the time of your return filing. Then as we all know that Income Tax Department has launched its new portal 2.0. So how you can download your Form 26As from this new portal? What you have to do, first of all, just log into www.incometax.gov.in, go to the income tax website, then this kind of filing page will be in front of your screen. You have to log in using your PAN ID, click on continue. When you will click on continue, you will see this kind of secure access message box will be there. Just tick mark this one, enter your password and then continue. But first you have to tick mark this one. This is just for security reason that your account is accessed by you only. So due to this reason they have updated this thing. After entering password, click on continue and proceed. When you will click on continue, then this dashboard page will get open. You have to go on to the e-file, go on to the income tax returns, and fourth point will be view form 26As. When you will click on this view form 26As, a disclaimer dialog box will be in front of your screen. So in that you have to just click that and proceed, and when it will redirect you to the traces portal. So over there you have to select the right assessment here. When you have selected the assessment here, just click on view or download and your entire form 26As will be on the screen. You can download it in PDF form also. So in this manner you can download your form 26As, which is also very important document for your IT filing. Just remember this thing that if you are a salaried individual, then your form 16 details and your form 26, whatever your details will be in form 16 will be automatically shown in form 26As also. So before IT filing you have to make this sure that your IT return data is matching with your form 26As. Otherwise for sure you are going to get the notice from Income Tax Department. So just make sure that you're uploading your form 26As data also in your ITR. Then coming on to our next topic, which talks about the documents which you have to keep in mind. So as we know that now the offline system has completely vanished, and you can maintain or just keep a file with you in which you are recording all the documents for your reference, for your future reference. Or if you want, you are comfortable, then you can just maintain all the records in your computer or laptop also in this whatever format you are comfortable with, so that in case in future if you receive any notice, then you are able to find all the documents very easily and you can submit to the Income Tax Department. So what are the documents which you have to generally keep in mind when you are filing your income tax return? First and foremost are your Form 16 and 26As, which we discussed in detail in the previous slides. Apart from these two documents, you will be having the interest certificates. So in the interest certificates, what you have to do is if you are having bank statement or passbook, then you have to calculate the total amount which you earned as interest from your saving bank account, then interest income if you have from fixed deposit, or if your any bank has issued the TDS certificate. These three documents you have to keep it handy with you, and in your income tax return you have to upload this. Not upload this, you don't have to attach any kind of document with your ITR. You just have to keep and enter the data or value, I can say, in the ITR. This I'll show how you have to enter each and every data in which heads when we will be discussing about the demo. At that time we'll show. So once we are done with the interest certificate, then Form 26As you obviously have to keep it with you because you have to upload this. then whatever tax saving investment proof you are having, ATC, ATD, then 80 triple C, CCD 1B, all those investment proof you have to keep it with you. And yes, in case if you have forgotten to submit some documents to your employer, so are you in doubt that can I claim at the time of income tax filing also? So yes, you can include, if you have not given it to your employer, then you can include that data at the time of your filing by yourself. But that data should be genuine. Only condition is that. Otherwise, you can include this. Let's say for example, you are having donation receipts. Okay, so you have not submitted those donation receipts to your employer. You can still include that donation amount and in your income tax return under section 80G. Likewise, same goes with interest income. So this will be discussing in the other sources head. That time I'll tell you how you can include that. Then apart from this, if you have any documentary proof to claim deductions from section 80D to 80U, then also you can keep it with you and include that in ITR. Apart from that, if you are having any home loan statement from bank or NBFC, then include the interest component in income from other source, income from house property head, and the principal repayment in deduction head under section 80C. Home loans, how you can claim your home loan, what are its tax benefit, this I am going to discuss in the next slides, which will be income from house property. That time I'll tell you about the home loan in very detail. Then at last you have to just enter correct bank account details and Aadhaar card in your ITR, because whatever bank account details you are going to mention, in that only you will be getting your refund amount. So make sure that you are entering the correct bank account details, bank number, then IFSC code, and the name of the bank. So this was all about what are the documents you have to keep in mind. And as of now, the ITR filing date has got extended till 31st December 2021. In normally 31st July is the last date, but due to this COVID uncertainties, date has got extended already till 31st December. So still we all are having time to file our ITR. So make sure that you are collecting all the documents and filing a return on time. Then our next topic comes, which talks about the new regime, which was introduced from this year budget. So this was very long demanded by most of the taxpayers to reduce the tax slab rates. They were insisting to reduce the tax slab rate, but government reduced the tax slab rate. But it came with a catch of removal of all the deductions and exemptions that were available under the old regime. And this is the first year when we all have to exercise the option whether we have to remain in the old regime or migrate to the new tax regime. So the salaried people have right to choose between old or new regime every year. But in case if you are having any business and profession income, then you cannot go back to the old regime. You cannot go back or switch to the regime once you have opted for. Say for example, you were having business and profession income along with any other income and you selected new regime in this year. After that, from next year onwards, you have to consistently follow new regime only. You cannot switch back to the old regime. But if you are having only the salary income, you are salaried individual, then you have option to choose or switch between the regime every year. Let's say for example, I have opted new regime in this financial year, and next year I'm thinking I'm getting more benefits in old tax regime. So next year I can switch to old regime and there is no problem. There will be no problem in that because I'm salaried person who is having no business and profession income. Then I have option to switch between the regime every year. There is also one more thing, that in case if you have told your employer that you will be opting for old regime, you will be continuing with old regime this year. But at the time of income tax return filing next year, you came to know that you are getting more benefit in new regime. So at that time also, can you still switch? So answer to this is yes, Even if you have told your employer that what regime you want to proceed with, then too at ITR filing, if you are comfortable with another regime, then also you can switch at that time also. So this will make your things very easy. This is the comparison table of the slab rates between the new and old regime. So as you can see, under the new system, income between 5 lakh and rupees 7.5 lakh would be taxed at 10%, while income between 7.5 lakh and till 10 lakh are taxed at 15%. This was the 20% flat on the entire range for the existing regime, starting from 5 lakh till 10 lakh. Then above income which was above 10 lakh would be taxed at 30% flat in the old tax regime, but in the new regime it has been broken into three parts, which are 20% for 10 lakh to 12.5 lakh, then 25% for 12.5 to 15 lakh, and 30% will be for the income which are falling above 15 lakh. So the current tax system is complicated to say the least. While the tax rates are high, there are a lot of ways to reduce your tax liability also. There is one common question that which regime is beneficial for me. To answer this question, there is a clear tax calculator. Nupur will provide this link in the chat box. Using this link, when you will open this link, you will see this kind of a page. You have to select what age group you are falling into, then go on to the next step. When you will come on to the second point, you will see the whatever salary income you are having or other sources income if you are having. From wherever sources you are having income, you have to fill in the respective columns. Then in third point, whatever deductions you are claiming from section 80, you have to mention that. And in the fourth point, there will be a comparison table in front of your eyes, which will be of old tax regime as well as new tax regime. Even if you just put the rough amount, then too you will be able to calculate the difference between the new as well as old regime, and you will be able to figure it out on your own as per your slabs which you are falling into, that what regime is beneficial for you. This is how this old versus new tax regime works. So while figuring out whether you should choose the old or new regime might look complicated, but if you approach it in a systematic way, then it is not that difficult to figure it out. You just need to calculate all the exemptions that you are availing. Say if you are living on rent, then you would be claiming HRA, which was the biggest salary exemption which everyone enjoys. So apart from that, other tax-free components include LTA, food bill, phone bills, etc. So all these will become taxable if you choose to switch to new tax regime. But if you are continuing with old regime, then you will get this exemption, but not in the new regime. Then secondly, just look at the deductions that you want to claim. So as a salaried employee, two deductions that you automatically get are standard deduction of rupees 50,000 and your contribution towards your employee provident fund. In the new regime, you won't be able to claim these deductions even though you will continue to contribute to EPF. Over and above, you cannot claim deductions against your home loan if you have one or insurance policy, which till now has helped to reduce your taxable income. Now combine these exemptions and deductions and minus them from your salary to see that what is your taxable income and what it would be if you let go all of these deductions. This should be the deciding factor for which regime you should go for. This is why this calculator has been provided. All the exemptions include that, all the income which you are having include that, and automatically software will do work easy for you. Then coming on to our next topic, which is about income from house property. So owning your own house is everybody's dream, and that is why the in government of India has provided many I can say taxation benefits on this, and they are promoting to have your own house. So house property is of three types: self-occupied house property, then let out house property, and rental house property. Self-occupied house property is used for one's own residential purposes This may be occupied by the taxpayer's family, parents, or spouse and children. Vacant house property also will be considered as self-occupied for the purpose of income tax. From the financial year 2019-20 onwards, benefits of considering the houses as self-occupied has been extended to two houses. Now, a homeowner can claim his two properties as self-occupied and remaining as let-out house property. Then, what is let-out house property? House which is rented for the whole or part of the year will be considered as let-out. Then, once you're done with this two, third part will be your rental house property. In case if you have rented out your house and you are receiving rental income from that, then you have to include that under the rental house property head. If you have taken any home loan, then you will be getting tax deductions on that. So homeowners can claim a deduction of up to rupees 2 lakhs on their home loan interest income if the owner or his family resides in the house property. Same treatment also will apply if the house is vacant. So if you have rented out the property, entire home loan interest is allowed as deduction. In this, if you are paying the interest amount and if that interest amount is up to rupees 2 lakh, then you can claim deduction under section 24 and include that in the income from house property head. Tax deduction on principal repayment also will be allowed. It is available for up to rupees 1.5 lakh, which will be within the overall limit of ATC section. Sorry. If you are having any stamp duty and registration charges, and in the year in which you have paid these exemption in the expenditure which you have incurred, so this will also be included in ATC in the overall limit of 1.5 lakh. Then in home loan component, in house property component, suppose if you have owned your house for the first time and you are first time homeowner, then you will also get additional benefit under section 80 EEA. What this section talks about, this is additional, I can say the extended tax benefit of the interest deduction for housing loan for affordable house projects during the period starting from 1st April 2019 till 31st March 2022. This section says that you can claim interest payment up to rupees 1.5 lakh, which will be available under section 80 EEA. So deduction will be over and above the deduction of rupees 2 lakh, which was coming under section 24, and 1.5 lakh will be in this 80 EEA. So altogether you can claim 3.5 lakh for interest on home loan. But there are few conditions. Only then you can avail this 80 EEA deduction. What are those conditions? First one is that housing loan must be taken from a financial institution or any kind of housing finance company for buying a residential house property. Then second condition is that stamp duty value of the house property should be 45 lakh or less. And the third condition is that, third and important condition, taxpayer should be the first time home buyer. Then only you can avail this additional 1.5 lakh benefit. So first exhaust your deductible limit under section 24, which is rupees 2 lakh, and then come on this additional section, which is 80 EEA. So this was about the income from house property. Another heads of income, which is income from other sources. So whatsoever income if you are having, if it is not falling under income from salary, house property, capital gain and business and profession, that income will come into income from other sources head. What are now the income which comes under income from other sources head are, first one is saving bank account interest income. In case, as we discussed earlier, if you are of age less than 60 years and you are having interest income, then you will get deduction up to rupees 10,000 in a financial year under section 80 TTA. Yeah, the deduction is allowed on the interest income which you earned from saving account with a bank or saving account with a cooperative society carrying on the business of banking or saving account with post office. Senior citizens are not entitled to benefit under section 80 TTA. For senior citizen, there is section called 80TTB, in which they will be getting deduction of rupees 50,000 on the interest income which they receive from fixed deposits with banks, post office, etc. So if your age is less than 60 years, include your interest income in other sources head and claim the deduction in 80TTA. But if you are senior citizen, then avail the deduction up to rupees 50,000. Then another income which falls under other sources head is tax on fixed deposit. In case if you are if you have received fixed deposit interest income, then if it is reflecting in the 26A's form, bank sometimes deduct TDS on that. So if it is reflecting in form 26A's, then include that income in other sources head also. Another income will be your exempt income. PPF and EPF amount which you withdraw after maturity is exempt from taxes, and it must be declared as exempt income from the income from other sources head. You have to make this thing clear that whatever exempt amount you are including, that you have to include in the respective head. We'll be discussing that where you have to enter in the demo part. In case if you are if you are collecting pension on behalf of someone who is deceased, then you must show this income under income from other sources head. There is a deduction of rupees 15,000 or 1/3 of the family pension received, whichever is lower, from the family pension income. And this will be added to the taxpayer's income, and it must be paid at the tax rate which is applicable. Then at last, if you are earning any amount winning from lottery, game shows and puzzles, so in that case it will be taxable under the income from other sources and taxable at flat 30% rate plus 4% of education cess. So these are the all income which are included in income from other sources head. And apart from this, now we'll be talking about that what are the right ITR form which you have to choose. So if you're filing your income tax return via ClearTax platform, then you don't have to worry about which ITR form will be applicable on you, because as soon as you will include all your income details in ClearTax software, after fetching all the details, when you will go on to the last tab, which is tax filing tab, on that page you will see that software has automatically selected that which ITR form is applicable for you. But still, to give a brief about all the ITR form, we'll be discussing one by one. So first and foremost, very simple ITR, which is ITR 1. In this ITR, if you are having any income from salary or pension or income from other sources, or you have one house property and your total income is less than rupees 50 lakhs, then in that case ITR 1 will get applicable for you. Apart from the all the income which you were having in ITR 1, including if all those income was exceeding more than 50 lakh, then in that case ITR 2 will be applicable for you. Or if you are having income from capital gain, or you are having more than one house property, foreign income or foreign assets, or you are holding directorship in a company, then ITR 2 will be applicable on you. In case if you are having every income which was in ITR 2, which is capital gain income, then your income is more than 50 lakh rupees. Along with this, if you are having any income from business and profession, or you are partner in a firm, or your presumptive income is more than 50 lakh rupees, then ITR 3 gets apply on you. Then every income from ITR 1 which you are having, along with that, if you are having any presumptive income under salary head, other sources, or one house property, then ITR 4 gets applicable on you. So this is how you can make the selection of ITR form depending on which income category you're falling into, and you can make the right choice. But using the ClearTax software, you don't have to worry about the ITR forms. Discussing our next topic, which is what are the consequences if you are not filing your ITR on time. Usually everyone should file their ITRs on time, otherwise you will end up paying the penalties or interest amount for delay. Then you will not be getting any refunds if you are filing belated return, or if you are not filing a return on time, then you'll not be able to carry forward your losses also. There will be prosecution or fine for non-filing as well. But if you file your ITR on time, then you can claim tax refund, you can claim your visa applications, then your loan application process will also be smooth. You'll be able to carry forward your losses, you'll become a tax compliant, and most importantly, you will not have to pay any kind of penalties or prosecution for this. So it's better that you should file your income tax return on time. You have to file it before 31st December 2021. Don't wait for the last moment. Just file the income tax return if you have all the documents with you, and just file. So now we'll be discussing how you yourself can file your income tax return. Just give me a second, I'll switch the screen. I hope my screen is visible to you. Yes. So as you can see, there are three options. This one is free filing clear tax software, in which you yourself can file your ITR free of cost in few minutes. In case if you have to avail any expert assistance services, you want that a CA gets assigned to your case, and you need somebody to explain that what all complications you are having in your return. You want to take help. So in this, you can purchase a plan as per your income, whatever you're having. Accordingly, you can purchase, and chartered accountant will be assigned to your case, and they will help you with filing your ITR. But we are discussing with how you yourself can file. Click on this. If you are having your Form 16, then upload Form 16 PDF. As of now, I'm assuming that everyone would have got their Form 16. But if you are not having, then you can click on continue here without Form 16. So upload Form 16 PDF, drop file here, wherever location you have selected the file, just click on that, click on open and proceed. Once you will click on proceed, you will see that software has read your Form 16 successfully. Click on yes, proceed. If you have changed job during the financial year, so if you have changed, then click on yes, I change job, or if not, then let's proceed to e-filing. But if you have changed the job, then you have to give the details of every other employer also, and you have to upload all the Form 16. But as of now, we are having only one Form 16. When we'll click on proceed, you will see personal information tab. In this, first name, last name, date of birth you have to mention, PAN number is automatically captured from Form 16, and your father's name, and click on save. Then fill the address details. You will see that Form 16 has automatically when Form 16 was captured, all the address details also has been captured. If you want to change the address, you can edit it and click on save. When you will click on save, second point you will see is of income sources. So here you will see all the 5 heads of income are present over here: salary, other income, house property, capital gain, and business and profession. So by uploading your Form 16, software has auto-fetched entire data from your Form 16, and you don't have to manually fill any data. As you can see, every detail is automatically filled. In case if your employer has deducted any amount of TDS, that will also be reflected over here. But in this sample Form 16 which I uploaded, there was no TDS deducted, so due to this reason 0 is showing over here. If you are having any another salary income, and you are not having Form 16 or having Form 16, you can also click save and add another salary and fill the data. Then click on save and proceed. In the another income head will be other income. So in this you will see the interest income from saving bank. If this is less than 10,000, then you have to enter it, or whatever income it is. If it is more than 10,000 or less than 10,000, you just have to enter this, and it will be automatically captured under 80 TTA section up to rupees 10,000 in the deduction tab. Then interest income from deposits if you are having, enter that. Dividend income from domestic company if you are having, enter that. Then dividend income from mutual funds. Any other income if you are having from apart from all the salary, house property, capital gain or business and profession head, just enter it over here and mention that what was the source of that. Then any exempt income if you are having, add it over here, or agriculture income. If not, then fill the respective details and click OK. Third head you will see, which will be your house property. Click here to add your house property details. So in this you can see there are three types of house property options present over here. Whatever house property you are having, you are owning, accordingly select that and proceed. If it is self-occupied and you are having a home loan on that, then enter the interest paid on home loan, and that will be maximum deduction of up to rupees 2 lakh. If you are having any interest paid during the pre-construction period, enter it over here. Then enter the house property address in this column. If it is same as personal information, just tick mark this and automatically it will be present. But if not, then you can enter the address manually as well. If you are having any co-owner's detail, if your house property was owned by another person also apart from you, then you have to mention the co-owner name and their PAN number and what percentage of share they are having. If you are having any other house property also, you can click on save and add another house property. Click on save and proceed. When you will come on to capital gain head, in this if you have sold any asset, any shares, debentures or mutual funds or any stock option or anything, then you have to upload file over here and you will see that ClearTax software supports CAMS, Zerodha, Carvi, Upstocks and many more such kind of PDF files. If you are having anything from these, you can directly just select one option and choose file over here. But in case if you are having apart from these specified brokers, so you have to download our Excel template here and you have to feed the data in the ClearTax Excel template and then upload the ClearTax Excel template over here and then click on proceed. When you will go on to the business and profession head, if you are having any income say from freelancing or any presumptive income if you are having or any speculative income if you are having, accordingly enter all those income details in the respective head and continue. So whatever income if you are having, enter in the respective heads of income. All the 5 heads of income are mentioned clearly in this income sources head, all you will see. So due to this it will get very easy for you that what all income you are having in one by one head, you can enter it and proceed. When you will come on to the third point, which is deduction, you will see that whatever deductions, if it is included in your form 16, software would have taken that, so it was included in this, so it is showing. And there is also a pro tip over here that for the current financial year, try to invest 1.5 lakh to maximize your tax saving, because 31,200 is less than 1 lakh 50,000. So due to that reason, software is just recommending and giving you the tip that you can invest maximum 1.5 lakh in this. Then another section you will see is ATTTA. So as we included this income in the interest income head in other sources, so that is why this was less than 10,000. So it is coming under deduction tab as well. If you are having any ATG donation, you can add the donation amount and proceed. In the more deduction tab, you will see that for self or family, if you have any in medical insurance premium, you can include it over here, maximum up to 25,000. But if you have taken for your parents, you can select the respective age below 60 years, 60 to 79, whatever age they are having. Accordingly, you can select that age and enter the insurance premium amount. Then 80, which is educational loan, 80 triple C, CCD 1B. Accordingly, whatever investments you have made into, just enter the amount in the respective heads, all you will see deductions are mentioned in these three columns A, B and C. Then C tab will be about disabilities. ATDD, ATU. If you have any disabled dependent or disability for your own, then according to the percentage of the disability, you can select that and include the amount. Then fourth point will be the taxes paid. So you can upload your form 26 days by clicking on this, and entire data form 16 will be captured, auto captured. Then when going on to the tax filing tab, you will see that great, you have no taxes due. In case if you have any taxes due, you have to first make the payment, go on to the taxes paid column, and here you will see B is self tax payment. You have to add the entry over here. But in case if you are getting any refund amount, so in the tax filing tab, first go on to the bank information, enter your Aadhaar card number and whatever primary bank account you're having, enter that bank account number, IFSC code and name of your branch bank. In case if you are having any other bank account also, you can enter that too and click on save. In the e-filing tab, you may see refund amount, tax payable or no tax due. Once you're done with this, just scroll down and you will see that ClearTax give you the recommendation that which regime is useful for you. So as per this form, sample form 16, ClearTax is saying you to continue with the old regime. If you want to see the comparison table, just click on compare and switch and you will see that old regime is containing this data and new regime is having this data. So if you want to switch regime, you can click on switch regime and proceed. So it will show that which ITR form is applicable on you. So as per the data of form 16, ITR 1 was applicable. So the software is suggesting ITR 1. If you want to download the word report, you can download detailed report over here. Once you have cross-checked all the details, just download the ITR JSON over here and then you have to upload this JSON file to the income tax portal. How you can upload? For that, you can see download steps guide. Just download this guide file. Open this and you will see that all the steps are mentioned that how you can upload the JSON file on the income tax portal. Just log into the portal, enter the password, then file now. Go on to the first select the assessment here, then in the filing type select offline mode. When you will select the offline mode, select 139.1 original return and select the ITR type. ITR type as per your information it is ITR 1, 2, 3, 4. Accordingly just select that and click on proceed. When you will click on proceed, in the offline mode attach the JSON file which you downloaded right now. Once you will upload it, here you will see validation successful dialog box. Once this has came, you have to click on proceed and you will be landed on this e-verification page. If you want to e-verify it now, then click on instant e-verification. If not, then you can click on the second point which is e-verify later. If you are doing instant e-verification, then it will ask you that by which mode you have to e-verify it. If you want to verify it using Aadhaar OTP, select the first option. If you want to verify it through the net banking, you can select the another options. Likewise, you can proceed. If you are selecting Aadhaar OTP, your OTP will be generated on your mobile phone. You have to enter that OTP and click on submit button. Once you will click on submit button, you will see that your return has been successfully filed and verified also. So you can download the acknowledgement over here and also you can download your ITR. This is how you can upload your JSON file and you can complete your download process over here. This will make your return filing very easy and you don't have to worry about anything. It will be very easy process. So I hope you understood many things from this session and all your doubts would be solved by Nupur. But now I'll be taking up all the questions, whatever is coming up. Mohammed, if you are a business partner and if you have incurred business loss, then you can include that in your at the time of your income tax filing. Any more questions if you are having, you can just ask me. Then we'll be winding up the session. Also, if you have any further queries after the session, you can write to on our mail ID, which is support@cleartax.in, and our support team will answer all your questions over there. So I think there are no more questions. We can wind up our session. I hope this was super useful for you. Thank you so much for joining.